If you're a small business owner, you know how much tax policy can affect your bottom line. Well, there's a major new House bill in the works, and it's packed with tax changes that could impact your business for years to come. So it's not law yet and may change before it's finalized, but it's moving fast. So we wanted to give you a high-level overview of 10 important tax changes in this bill that will affect your tax situation as a small business owner. So here they are in no particular order. So number one, we'd go back to 100% bonus depreciation for equipment and other qualified property purchased after January 19, 2025 through 2029. So right now, bonus depreciation is only at 40% and would be dropping again next year. If your business is planning on expansion, this could be a game changer to your after-tax cost. Number two, good news for innovation. The bill brings back full R&D expensing from 2025 through 2029. Right now, you have to amortize the deduction of those costs over 5 years, increasing the tax burden and lowering the net ROI on those research projects. Number three, for pass-through businesses like an LLC, S-Corp, or sole proprietorships, the pass-through deduction would be increased to 23.5% from 20%. Number four, if your business provides childcare for employees, here's some great news. The employer-provided childcare credit would be expanded from 25% to 40% and up to 50% for eligible small businesses. Plus, the annual cap would increase from $150,000 to $500,000 or even $600,000 for qualifying small businesses. It's a strong incentive to support working parents and attract talent. Number five, part of the overtime pay for your workers could become exempt from tax through 2029. This change will put more money directly into workers' pockets who take on those extra shifts. Number six, if you run a business in a traditionally tipped industry like restaurants or salons, here's a big one. Some tip income would be tax exempt through 2029. But heads up, it excludes highly compensated employees and applies only to specific industries that'll be spelled out later. Number seven, the bill would triple the sales and local tax deduction cap from $10,000 to $30,000 for joint filers, though it begins phasing out for incomes over $400,000. So that's a win for high tax states especially. Number eight, 100% expensing for costs to construct certain buildings used in manufacturing, agriculture, or extraction, as long as construction starts before 2028 and the structure is placed in service by the end of 2032. Number nine, the bill would make permanent the lower tax brackets from the 2017 tax reform. So these were set to expire at the end of 2025 with the top tax rate jumping to 39.6%. But if this bill passes, they'd stick around at the current rates, topping out at 37%. And finally, number 10, if you accept payments through platforms like PayPal, Venmo, or Stripe, then this is a big one. The threshold for getting a 1099-K form will go up to 20,000 and 200 transactions from that same payer. That's a major change from the current $600 reporting threshold. So for many small sellers and freelancers, this could mean less administrative burden for small businesses that are starting out. Now remember, this bill isn't law yet. There's a lot of debate about the bill's cost and some lawmakers calling for tighter spending controls. But if you're a small business owner, these are the kinds of changes that could affect how you hire, invest, and plan for the future. We'll keep you updated on these provisions and others as this bill moves forward. We're going to focus on the practical impact to you, the small business owner. So in the meantime, if you have any questions about how these proposals could impact your specific situation, then talk to your tax advisor or reach out. We're here to help. And be sure to subscribe to our channel to stay up to date on the latest.